afternoon. You're watching Businessworld Live. I'm Danie Laurel. Let's take a look at how the local bourse closed today. You can see on my Bloomberg terminal here, the PSE index fell 1.7% to close at 6556.57 this Thursday morning. You can see how the movement was really just a sustained downward trend throughout the entire day. Now, this was the biggest decline in the rest of the Asian region. This happened, of course, as the country's daily case rate climbed to the highest in almost 4 months. DOH had reported earlier today that we had 12,021 new infections on Wednesday. That was the fifth ever highest daily count we've seen since the beginning of this pandemic. That brought us to our worst loss since at least July 30th. Now you can see on my terminal here which stocks had led those declines. SM Prime heavily sold off, down by 4.14%, followed by Emperador, Mega World, and SM Investments, as well as LTG Group. Now you've got Emperador, of course, which has been battered as of late. It had its seventh straight day of losses. That's after it was announced they will be deleted from the Bellwether benchmark index. That sank by even as much as 3.9%. Another one that also dropped, LTG, was actually after having reported 63% plunge in the first half earnings. Now, one, of course, which was in focus throughout the entire trading day was FILRT. So that is the Philinvest Real Estate Investment Trust. They did close on a positive note, and you can see on your screens here that virtual listing which had occurred. So they had a price at an IPO price of 7 pesos. Incidentally, the pre-IPO price was actually at 7 pesos and 50 centavos. It was moving up and down throughout the day. The highest it reached was 7 pesos and 14 centavos, but ultimately it closed 0.02 up. That's about 0.3% up to 7 pesos and 2 centavos. Another thing that they had announced today as well is that they will be adding 3 Grade A office towers towards the next 18 months. So that will be expanding the REIT portfolio to around 150,000 square meters with the purchase of these buildings. And this was announced during the virtual briefing by their CEO, Maricel Brion Lirio. Another thing that is very interesting to watch out for here is the shares of the parent Philinvest Land had actually fallen by as much as 1.8%. That was the first loss in 4 sessions, this amid the listing of their REIT unit. So we still have a lot of earnings to go through, and to help us out with this hectic trading day, we actually have with us Japhet Tantiangco of Philstocks. Good morning, Japhet, and welcome to the afternoon broadcast.
Good afternoon, Ma'am Danie. Thank you very much. My pleasure to be on your show.
Japhet, let's kick off with the performance of the bourse today. We are almost ending the trading week, so one more trading day left. How is this moving for you? Are we really much in line with the number of cases that are being reported? Are all the risks in terms of the ECQ being priced in, or are investors pricing in a prolonged lockdown?
Well, with respect to the market's movement right now, the way you see it, we still have a bearish bias. We still have a bearish bias for the market. First and foremost, let's try to dissect what happened today. So the market declined, and that is because of the sustained surge in COVID-19 case counts. If you're going to look at the week to date, daily case counts, it's above 9,000 cases so far, averaging more than 9,000 cases per day, and that includes yesterday's more than 12,000 cases, which is more than last week's average of just more than 8,000 cases per day. So we see a sustained surge in COVID-19 cases, and the worry here is if this continues on, then there's a possibility of then there's the risk that the enhanced community quarantine, the stringent quarantine measures that are implemented in selected areas in the country, they will be extended, and at the same time they're going to be expanded into other areas. And if so, of course, it's going to hurt our economy again. We saw that already in the second quarter of 2021, While yes, in the second quarter of 2021, our gross domestic product posted an 11.8% year-on-year growth because of low base effects. If you're going to look at on a seasonally adjusted quarter-on-quarter basis, you're going to see that we declined 1.3%. And that is because of the impact of the strict quarantine measures implemented back then. So now here we are, we're seeing almost the same story. We're in a lockdown again, which could be prolonged because of the ongoing trend in cases, and because of that, that's what investors are pricing in. That's what investors are worrying about. That our third quarter could be the same. That yes, we may still see a high year-on-year growth figures for the third quarter, but on a quarter-on-quarter basis, we may still see a decline. And if that would be so, then it would imply that our recovery is unstable, and that the economy's outlook is still uncertain, and there's still that room for the downside for the overall economy. That's why the general market is reacting this way.
Japhet, what's going to be happening in the short term? Is this a level that bargain hunters are watching out for? Some analysts have said it's actually time to be entering now while we're in this ECQ, or as you know, and some of the risks have already been priced in. You already mentioned the GDP print that came out. There's of course the BSP decision also, but then like you mentioned, there's also a barrage of earnings that have already come out, and perhaps these extensions to the ECQ have already priced in. Is this time to be entering the market?
Well, for if we're going to look at the market from a technical standpoint, for me, it's not yet a good time to come into the market right now. If you're into a long term, perhaps you can do some accumulation, but limit your buying. The best time to enter the market would still be at strongly determined support levels. So right now, if you're going to look at the market, sadly, it went below 6,600. So it wasn't able to sustain its ground at that level. That is a determined, for us, that's a determined resistance level. Since it wasn't able to sustain its ground at 6,600, I believe it's best for us to uh, to wait and see if the market would be able to confirm its next support, which is at 6,400. Okay, if the market is able to hold its ground at 6.4, then that could be a good time for us to hunt for some bargains. There is something worrisome about the market, however, and that is if you're going to plot its 50-day and its 200-day exponential moving average, it's about to cross again, meaning the 50-day exponential moving average is about to cross below the 200-day counterpart. And if this continues, then of course it's going to form a death cross, which implies a possible or signals a possible downtrend moving forward. So for me, it's still a wait and see mode.
Okay,
You
let's
know.
not start catching the falling knives here. Let's talk about the big listing of today, PhilRT, ending at the end at 7 pesos and 2 centavos. How does this performance in its debut tell you? What story does it tell you about the interest of investors? It was actually 8,000 retail investors. That's the most among listed investment trusts so far. But as you mentioned, there's still a lot of risks on the table. Is this a dividend yield they've projected for 2021, 6.3%, and 2022, 6.6%, going to be achievable given all of these risks on the table and possible lockdowns?
Well, with respect to FLI REIT, yes, investors are pricing in the risk. That's why we weren't able to see such a robust performance today. On the upside, yes, it has competitive dividend yields, and this is suitable for investors who are into dividend plays, who are looking for financial instruments where they can just preserve their capital. So this is a good venue for them. But the problem is still, yes, there is the risk. There's the overall risk in the economy, and one of those which are heavily affected is the property sector. So do take note. Well, with PhilREIT, it's heavily exposed with the BPO, and at the same time, it's also exposed with the POGO sector. And these are some of the sectors that are currently being hit by the overall economic condition of the country caused by the COVID-19 pandemic. So this is what investors are worrying in right now. That's why we didn't FLI REIT's rise today was very much tempered. Investors are weighing the upside and downside. On the upside, yes, you do have a good dividend yield, but on the downside, the question is there: will you be able to deliver given the current economic conditions?
Okay, let's move on to some earnings we need to get through, Japhet. A barrage of holding companies having reported as of late. You've got JG Summit, so second quarter net income swinging to an income that's 815 million pesos versus the losses that they had. But of course, second quarter, really, really bad quarter last 2020. Tell us, are you looking forward to the rebound of conglomerates? And does this say anything about how our economy is actually recovering, at least in the second quarter and moving forward?
Well, with respect to the conglomerates as well as to the other earnings that we saw, most of them experienced a surge in earnings, and this is attributed mostly due to low base effects. So our corporate earnings, they're just reflecting what happened with the second quarter economy or with our second quarter GDP, which jumped because of low base effects because the second quarter last year, it was a very heavy year for the economy because of the stringent lockdowns. Now, if you're going to compare that to the second quarter 2021, yes, we still had stringent lockdowns, but compared to the second quarter 2020, they were more relaxed, giving more breathing space to our businesses, and that caused the higher earnings for the second quarter 2021. Moving forward, however, again, as we mentioned, the third quarter, there are still risks because of the resurgence of cases, because of the Delta variant spread, and because of this current lockdowns that we're experiencing that could be prolonged. Now, with respect to the conglomerates, what's good with them or the advantage with them is, of course, they are diversified. So these conglomerates, they have a lot of industries where they can draw strength from, and because of that, we can somehow they have some downsides. Like for example, JGS, it was hit because of the performance of SEB. But if you're going to look at it, it has other branches, it has other segments which helped it post a good earnings result for the said quarter. Moving forward, that's likely going to be the trend for our conglomerates. We're still going to see companies that are going to be heavily hit, but at the same time, we're going to see companies that will bring these conglomerates up. I suggest we focus into the conglomerates which are still exposed, whose exposure is heavy when it comes to the defensive sectors, the likes of Ayala Corporation, which is exposed to the telecommunications, and at the same time energy and water. So most likely these are the conglomerates that we should be watching out for.
On the note of Ayala, any idea why it dropped 18 pesos today? Is that as a reaction to the second quarter earnings? They did mention core net income for the first half down by 8% to 13.3 billion pesos. And this comes, of course, after the Ayala land earnings seem to have surprised analysts on the upside.
With respect to Ayala Corporation, I believe today's decline was because of the general market condition. That's because well, first you have ASEN, which was expected to deliver greatly because of the non-cyclical nature of its business. It's in the energy sector. Unfortunately, they had some cost efficiency problems, which tempered their contributions to the overall conglomerate. And at the same time, again, they're pricing in what's going to happen this third quarter 2021, because some of the segments of Ayala Corp is still expected to be hit heavily. One of which is Ayala Land. It may take a hit from the current lockdowns. And remember that Ayala Land is one of the biggest contributors to Ayala Corporation's earnings. And then you also have BPI. So BPI can also take a hit because the current quarter is not good. So confidence may not yet be that strong. And if that would be so, then we could still expect weak bank lending. So it's going to take, so BPI is also going to take a hit there. And then you have Ayala Corp's industrial sector, which may also take a hit from the third quarter, from what's happening in the third quarter right now. So it's more of expectations on what's going to happen on the different segments of Ayala Corporation, which explains amid the current lockdowns and the risk in the third quarter, and that's what explains the decline that we saw today.
Okay, so as you mentioned, not just Ayala's earnings per se, but just the general edginess of the markets as we watch, of course, what's going on in the number of COVID-19 new cases. And like you said, also affecting even our REIT listing this
Mm.
morning. Thank you so much for those insights. That was Japhet Tantiangco of Philstocks.
You're very much welcome.
Checking in on the other headlines we're keeping our eyes on, loan applications under the Small Business Corporation are seeing a pickup with more firms needing a support to continue operations under lockdown. SB Corp consultant Alvin Limlingan spoke with Businessworld Live earlier, saying they've had 50,000 applications as of August 10th, more than half of which have been already approved. Limlingan says about 80% of loan applications came from services and trading. The agency has a separate loan program for small food suppliers. SB Corp partnered with large, fast-moving consumer goods companies to get insights on SME sales and to determine the appropriate short-term loans for their business. The program seeks to help small food businesses replenish their working capital or fund other business needs. Now, a bill filed in the lower house is looking to exempt procurement on emergency medical supplies such as oxygen tanks from being taxed. The bill's author, Albay Representative Joey Salceda, says this measure was made in response to requests from President Duterte to exempt oxygen manufacturers from tax. This bill will be tackled next week given the current COVID-19 situation in the country, and should the bill pass, it will be in effect until the end of next year. And those are the biggest stories this trading day, August 12th, 2021. Catch Business World live tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.